Even though all eyes are now on the US statistics and traders in the commodity market remain concerned about tighter oil supplies, Brent crude continues to trade upwards in an attempt to break above the resistance level of $87 per barrel. Data showed that U.S. crude oil inventories rose by 5.85 million barrels. Besides, the U.S. Energy Department revised up the estimates oil price average for the rest of the year. At the same time, the agency left no comments on rumors about a possible depletion of strategic oil reserves as early as the next spring. And the market concluded that speculations could be true and investors rushed to buy oil. Against this background, oil prices may well rise at least $90 per barrel. According to the trading chart, Brent crude oil futures continue to edge higher despite technical signals indicating their overbought status. If the price overcomes the resistance area of $86 and $88 per volume of long positions, will increase further. And in this case, a strong upside momentum could help the asset break through the resistance level of 88 and hit a new one-year local high. In the bear case scenario, the price may bounce off the resistance area. However, before heading down, the market is likely to spend some time moving sideways at the peak of the upward cycle. Meanwhile, gold not only fell below $1,920 per barrel, but also settled at those levels. Its fall accelerated after the 1,925 mark lost its status of support. If the downtrend remains intact, the yellow metal will most likely dip to the level of 1,900. And today the market is awaiting US inflation data. If the consumer price growth speeds up, thus forcing the Fed to raise interest rates again at its upcoming meeting, gold will come under stronger pressure. Speaking of the ruble, as soon as the dollar crept up to 98 rubles, the Bank of Russia finally announced that it would suspend its foreign currency purchases until the end of 2023. Notably, at the end of the last week, Russia's central bank resumed foreign exchange interventions on behalf of the finance ministry, which provoked further losses in the ruble. Nevertheless, the dollar still has a chance of hitting 100 rubles per dollar, and most likely the market will reach this mark by inertia, but then reverse. Obviously, such a sharp drop in the ruble sparks concern among society and most businesses. Obviously, yesterday's decision was made to calm the market. In addition, the Bank of Russia signaled its intention to continue raising interest rates, although it lifted the rate by 100 basis points at once at the last meeting. Moreover, inflation in the country accelerated to 4.3% from a 3.3%, leaving the regulator no choice but to further tighten monetary policy. Well, there appears to be an interesting situation. The Ministry of Finance demands to sell the currency in order to weaken the ruble. A weaker ruble boosts inflation, and the central bank tries to tame inflation by raising interest rates, thereby hindering economic growth into local businesses, and thus there are doubts about whose interests the central bank and the finance ministry serve. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon!